Hello everyone, and welcome back to the channel. If you've ever gotten to a point where you felt like you're running into a brick wall with your real estate investing, like you're doing everything yourself and there just aren't enough hours in the day, then this video is for you. We're going to be talking about the one single largest change that separates the part-time investors from the portfolio moguls: building a team. Today, we're breaking down step by step how to assemble your real estate investing team so that you can stop being the chief everything officer and start being the strategic CEO of your own empire. All right, let's get right into it. Here's the overview. The goal here is not to simply add a couple of assistants. It's a complete reinvention. You need to transform your identity from solo executor, the individual who finds the deal, manages the rehab, handles the tenant, to strategic CEO. Your job is to build a scalable, well-oiled machine that creates long-term growth for your portfolio, while you focus on the high-level decisions. This CEO transition is so tough because we naturally create bottlenecks for ourselves. I see it all the time. There's delayed hiring for starters. We wait until we're totally overwhelmed and burning out before we even think about hiring anyone. But by then, we have no time to properly train or lead them. The fire drill never stops. This generates the second problem. You are the single point of failure. If you're averse to delegating, everything has to go through you. There is no intermediate management level, so the entire operation depends on your presence 24/7. And finally, this results in a total system collapse. Absent structure and clear accountability, the whole thing just collapses under the pressure of growth. You can have profitable deals, but the business itself cannot be managed. Okay, so how do you even get started? You don't just go out and start hiring people willy-nilly. Here's the most basic principle. Your strategy dictates your structure. The kind of team you build is 100% determined by your investment strategy. A flipper needs an entirely different team than a long-term buy-and-hold investor. So before you run a single help wanted ad, you have to get crystal clear on your strategy. Let's get practical. If your strategy is buy and hold, your focus is long-term holding, passive income, and appreciation. So who are the individuals on your core team? Number one, I'm not joking, a rockstar property manager. This person is your passive income machine. They deliver low tenant turnover, high rent collection, and keep you out of court. Then, a conscientious bookkeeper. This isn't a matter of simply tracking expenses. This is a matter of detailed cash flow analysis and tracking the critical metrics that tell you if your investments are really healthy. And finally, a specialized agent. You don't need a normal real estate agent. You need one who knows how to run positive net operating income and can identify solid cash flowing rental markets, not necessarily pretty houses. Now, if you're a fix and flip investor, it's a high-velocity world. You're all about a quick rehab and resale within 6 to 12 months. Speed and managing costs are everything. Your most valuable player here is a quick financing solution, like a hard money lender. They underwrite loans based on the value of the property and your track record, not your W-2 income, so you can move fast. You need a good contractor who lives and dies by the schedule and the budget. A 1-week delay can kill your profit. And you need a sharp deal finder, an agent or wholesaler who's an expert at estimating rehab costs and the all-important after-repair value, the ARV. They must be able to see the after photo before the before photo even exists. When you get to commercial and multifamily properties, 5 units and above, it gets more complex, but the economies of scale are much better. This requires a full-time specialized team. You'll require an investment manager to find opportunities and manage the assets, a commercial broker with deep market knowledge, a property manager who can handle day-to-day at scale, an attorney for more sophisticated legal counsel, and an accountant for top-level tax planning and financial strategy. It is a team sport. And for those wholesalers in the audience, your transactional high-volume model is all about operational efficiency. Your team is a 3-department machine. First, lead generation. This team is solely focused on mass lead generation through data, skip tracing, direct mail, and cold calling. Then the acquisitions team gets to work negotiating and getting those properties under contract, and the dispositions team sells those contracts to your cash buyer list as fast as possible. Now, regardless of your personal strategy, there's a foundation, the core 4 roles that every active real estate investor needs. This is your operations engine. You have the deal finder, that investor-friendly agent we talked about, the lender for controlling your speed and scope, the contractor for budgeting and quality control, and the property manager who creates that passive income we all love. Now let's talk about the agent. As a flipping agent, you need to know rapid property valuation, accurate rehab cost estimation, and insight into market absorption rates so that you don't get stuck with a finished property you can't sell. For a buy and hold agent, they need to be masters of rental comparable analysis, accurate cash flow projections, and operating expense budgeting. And here's a pro tip on compensation. Pay them in a manner that rewards deals that meet your strict portfolio criteria. For example, a minimum cash-on-cash return. Don't reward volume only. Align their incentives with your long-term wealth. The numbers show veteran agents average well more than $92,000, while novices earn around $8,000. You want that experience on your side, so pay them in a way that will make them want to get you the right deals. Your lender is your deal key. For things like flipping, you need niche lenders that do what's referred to as asset-based lending. They're looking at the property's value, your equity, and your track record, not always your W-2 or your credit score. This is a tremendous competitive advantage. It enables you to put capital to work fast and grow very fast. While you're vetting a lender, you have to ask them outright, what's your niche? Are you hard money? Commercial? What are your true requirements for a portfolio such as mine? The contractor. Here is where deals are sometimes won or lost. Your due diligence is most important. Ask them, how many years in business? How many projects total? Can I view examples of projects like this? And most importantly, what is your current workload and capacity? You don't want to be their 20th project when they only have space for 10. And naturally, verify their licensing and insurance. A full-service remodeler generally has more extensive, superior coverage than a small general contractor, which benefits you. Don't just use the low bid system. I recommend the best value source system. You let the contract based on a combination of price, past performance, qualifications, and how quality their team is. You're buying an outcome, not a price. Once you've chosen them, get everything in black and white. Your contract is your best friend. It must have a very definite scope of work, what, when, and who. Payment terms must be tied to milestones, not time. This keeps the work on schedule. Include a dispute resolution process so you know how to settle disagreements before they happen, and set up the communication protocol. How often do you get updates? Weekly meetings? This prevents 99% of problems before they start. For the buy and hold folks, the property manager is everything. Their main role is tenant screening, rent collection, maintenance, and legal compliance. But you must look at their fee structure carefully. The standard management fee is 8 to 12% of rent. But watch the leasing fee, normally half to 1 month's rent for a new tenant. And they might keep up to 50% of late fees. Here is the essential vetting question to pose. What is your average tenant stay and your renewal rate per year? If they charge a high leasing fee, they might be compensated for turnover. You would prefer a manager whose interests are aligned with long-term tenant stability, as turnover is expensive. Let's discuss protection. A real estate attorney owes a fiduciary duty to you. They are legally bound to act in your best interest. A title company basically represents the title insurer. There is a possible conflict of interest there. For complex or big transactions, always choose an attorney. The cost of a simple closing is generally a flat fee, the same as with a title company. And in most cases, an attorney can also act as your title agent, creating a 2-for-1 protection system. Your financial team is a 2-tier system. You need both a bookkeeper and a CPA, but they perform different functions. The bookkeeper is tactical. They clean your data, track income and expenses, and give you real-time insight into your metrics. The CPA is strategic. They take the clean data from the bookkeeper and do long-term tax planning, maximize deductions, and ensure compliance. If your books are a mess, your CPA can't save you on taxes, and you're flying blind without the metrics to make good decisions. You need both, working together. So how do you find these A players? You need to have a really strict process. It does not occur in a single interview. Start with an application review to screen for experience, then a phone screen to challenge communication skills. Do in-person interviews to gain a sense of the interpersonal dynamics. Put them through a technical screen. Test their Excel abilities, their financial modeling. Then, a highly revealing step, a case study assignment. This shows their investment judgment, not just their technical ability. And finally, an executive round to see if they align with your long-term vision. To make it easy, the following is a quick-hit checklist. For your agent, how many flip/rentals have you closed in this specific market? For your property manager, what is your average tenant stay? For your contractor, will you provide references and what's your current workload capacity? And for your attorney, what's your experience in landlord-tenant law? Get specific. Now that you have the team, you cannot manage by gut. You need data. You need key performance indicators, KPIs. This makes subjective how's it going conversations objective data-driven management. You need to be tracking things across financial health, operational efficiency, tenant stability, project execution, and liquidity. So what does that look like in practice? For your property manager, track their net operating income. That's the ultimate financial health metric. And their tenant turnover rate. The goal is to maximize stable cash flow. For your contractor, track cost variance. Are they on budget? And schedule adherence. The goal is on-time, on-budget project completion. For your bookkeeper, track metrics like accounts payable turnover and the quick ratio to assess your liquidity and cash flow health for your next acquisition. The trick to this is linking micrometrics, like how fast you fulfill a maintenance request, to macro metrics, like your NOI. It creates the cascading accountability that enables your managers to manage, so that you don't have to. If you like this video and wish to proceed with your real estate learning, then subscribe to the channel and hit the bell so that you can know what's in store next. To keep your momentum rolling, I've chosen another video for you that will help you in your investing journey. You'll see it right here on the screen. Just click it and go ahead and learn some more. Thanks for watching. I'll see you in the next one.